All right, good afternoon. It is about 10 minutes after noon in New York. Today is Thursday, June 16th, 2022, the day after FOMC. We had a 75 basis point rate hike here in the United States. It looked like as if it was positive, with the S&P 500 ending positive for the day. We talked about hedges possibly coming off. We saw that after the 75 basis point rate hike. We saw the S&P 500 go all the way to around 38.40, 38.50 or so. We saw a lot of puts getting cashed, a lot of hedges coming off. But then, guess what? Hedges came back. We still ended positive, but now we're down about 3.33% today. Okay, so as I said yesterday, what did I say? I said, a lot of reactions to the Fed meeting happen after the day after or two sessions afterwards. Okay. People all over the world have already closed. European markets are closed, Asian markets are closed, everybody's asleep. And so, they'll get the report when they wake up, when they get to the office, and then usually we can see a big move happening at that point. Another big piece of news was that the Swiss National Bank increased their interest rates. It's no longer negative anymore, and that has caused some demand for cash, and we saw Eurozone stocks selling off because of that. Now there is an alternative. There is a safe haven currency that no longer has a negative interest rate. There was some demand for Swiss francs, and there was a risk-off sentiment in Europe because of that. All right. We're seeing, and that also affected us here. And that's around the time when that was announced, around 3-4 in the morning here in New York. That's when we saw our futures, with the S&P 500 futures, the Dow, the Russell, and the Nasdaq all selling off on that news, and we saw the VIX spike because of that. All right. One of the things that was discussed in the in the Discord was the relationship between VIX and SPY and the S&P 500 in general. So the VIX measures how expensive premiums are for near at the money options that are within 30 days of expiration. Okay, so most institutions hold stocks and equities as long-term investments. Nobody really sells anymore because of the tax implications. I mean, I'm sure there are some institutions that buy and sell, but for the most part, a lot of institutions now, they don't sell as much, and they hedge with options. You can buy puts, sell calls, and buy puts, which is a collar trade. You sell an out-the-money call, you buy some out-the-money puts. Okay. So basically that put is a protective put, and you're paying for it with a little bit of premium that you got from selling a covered call. All right. When put demand, and usually, when people buy options in SPX, SPY, they're doing that to hedge for their long-term portfolios. So when there's a huge demand for protection, we see the VIX going up. So that is a good indicator that we are headed down. So when you see the VIX trending up, that means that we have downward pressure. There is hedging demand, so we may be seeing lower prices. If you see a VIX come down, generally that is when a lot of puts are getting sold. So again, the market maker has to buy the underlying to take on those puts. So as you see the VIX fall down, you see the S&P 500 go up. All right. As you see the VIX go up, you see the S&P 500 come down. Okay. That's on the 1 minute. Obviously, if we put it on the daily, that's also true too. Generally, right here, see, we saw a little rise in prices, and when that rises, VIX is generally falling. when VIX spikes, that means there's hedging. Again, we see downward pressure in prices. Okay, this was a huge VIX spike right here. The demand to hedge was so great after that ECB meeting on Thursday that some of those hedges fell off. Now those hedges are still in place. All right, if you take a look at the S&P 500 cash index options positioning, we still have lots of in the money puts. 3,700, 3,750, 3,800, all the way up to 3,900, and these are fresh hedges. These are from last week. Okay, and we still have hedges from way back all the way up to the 4,000s, to the low 4,000s. So, so is it possible that we see a little bit of a relief rally later on today into tomorrow? Definitely possible. It's in the realm of possibilities. Or it could continue its sell-off, and we'll know. The VIX will tell us, okay? If the VIX keeps going up, if it keeps going up to 35, 36, obviously this thing is going to come down, all right? So we shall see what happens, okay? In other news, too, right now, the European central banks, they call it an emergency meeting. We'll see what comes out of that. Right now, if you look at the Eurozone bond yields, they've spiked up today. Yesterday, on the news, they said that a lot of the Italian bonds and other Eurozone bonds yields were coming down. Well, it spiked up again. And so, I think here too, we may see another spike in yields if we see that inflation is still going up. I've been saying this since the beginning of June. I still think that one of the biggest risks that is not being considered is food costs, additional food costs, especially in corn. That's one indicator that we can use. We can actually use those grain prices. Or last night I posted a picture of a chart that we can use. This is the TIP to TLT chart, okay? This morning it actually gapped up, okay? It gapped up this morning. When this ratio of TIP over TIP is the Treasury Inflation Protected ETF, and this is long-term Treasuries ETF, all right? So when this number is going up, it means that the market is expecting more inflation. Okay, if this is coming down, it means that inflation is slowing down, or possibly even deflationary pressures. All right, it was gapping up. It's coming back down to yesterday's trading range. We will see. We'll see what happens at the end. If it comes down to the lows of yesterday, maybe we see a little relief rally, okay? One place where we could see the relief rally starting from is in the Dow and in the banks. We've had the 10-year. This is the 10-year minus the 2-year yield in U.S. Treasuries. Right here, the yield curve was inverting, all right? And now it's almost flat, but it's almost inverted here, and it had a sharp steepening. So this is good for bank stocks. Bank stocks like steep yield curves, okay? When the yield curve inverts, that's usually when bank stocks do very poorly, okay? People start shorting XLF when yield curves invert. So there's a lot of shorts and a lot of puts on XLF. If this continues up, I can see short covering happening in XLF, which will drive up the Dow, which can bring up all the other indexes too. So we shall see. Okay, we will see what happens. All right, there's no need to guess. We'll see at the end of day where this closes, and we can make a decision on what we want to do tomorrow. All right. Let's take a look at the charts and see what's going on elsewhere in the markets. We have a lot of volatility. At the Fed meeting, There were some labor market projections on 2024. They're projecting 4.1 unemployment versus 3.6 today, assuming a constant labor force, which implies that there's going to be about 800,000 fewer people on payrolls. That is not such a bad economic output, especially with all this with the expected tightening that's happening. We will see. That's what everybody right now is afraid of, is will this cause a recession, right? Will all this tightening cause a recession down the road? And we're already seeing companies doing layoffs or freezing hiring. Coinbase, Redfin, Warner Brothers, Spotify, they're all either laying off or having hiring freezes. So this idea of a soft landing is still, being passed around. Will it really be a soft landing? We'll see. Okay. Right now, I think the market is trying to price in maybe a harder landing, which may be the case. And and I'm also revising my plan. I said I would buy the dip starting at 3,600 or so and scale in. I think what I'm going to do is just be patient and wait for that 3,400 first. I'm going to start scaling in there and see what happens there. Okay. And that's if we go straight down. If we just keep going straight down, I'll start scaling in longs around 3,400. All right. If we rally, I will continue building those put walls that I talked about from other videos. So IWM, QQQ, 3 to 6 month out, put vertical debit spreads. Also, I'll be buying some longer dated EEM puts as well too, to round out that position. Okay, so the plan changes just a little bit. All right, just because of this expectation. Again, it just really depends. The most important chart right now is the 10-year treasury. This is what everybody's looking at. Oh, it's a little bit down today. We'll see if this continues. But if this keeps going up, all right, if we look at the weekly chart, if this keeps going up and gaps up into next week, we could see some additional volatility and additional demand for hedging coming through. All right. One of the things that I also wanted to look at was some of our positions. Let's just go through some of our positions. One of the surprises that we had, I think one of the members here and Nunya, I think it was you, we went into some FXI put lottos right before FOMC Tuesday at the end of day. We were a little bit early. Okay, obviously we were a little bit early. We bought it here, all right, and it gapped up, and then it went down. Now the original thesis, this solid line is the Australian dollar. Okay, generally the Australian dollar will give us signals on what's going on with China. Whenever economic output is increasing in China, whenever they're doing well, there's usually a demand for the Australian dollar because that's where they get most of their natural resources from, their minerals, their copper, all of that, all the things they need to build. They do a lot of trade with Australia for that. Okay, now today or 2 days ago, I saw that the Australian dollar was continuing its breakdown. So I said, hey, maybe by the end of the week, FXI will break down. Well, right now, those lottos are at around break even. So we shall see what happens tomorrow. Although I will say that today, it is recovering some losses, actually. That does not look good for FXI puts. That does not look good. If this, that looks like it was able to recover a lot. That's a big move. That's a huge move for a currency. Okay. So we shall see, also Australian dollar demand is a good indicator of metals demand too. Metals demand, this is copper. Copper's falling actually. So now actually we're seeing now, two different, we're actually seeing divergence in these signals. Copper's down. Interesting. Copper is down. I didn't notice that before. Maybe this is short covering. It's hard to say. Maybe what we need to do is wait for this to be over and wait for tomorrow for confirmation. All right. If this is just short covering in the Australian dollar and this curves back down, I think our lotto will pay off. It's a very small position for me. Okay, so if it goes to zero, so what? I mean, I think I bought like just a few contracts of that. It's very, very small. I'm still around 98% cash with all the holdings, with the Dow, with the UVXY, the EEM puts. You know, I wasn't able to really build a lot of positions because we didn't really get our rally that we needed in the S&P 500 to build those put walls that we talked about for a couple of weeks now. All right, we wanted to get that rally so we could buy some vertical puts here, but that didn't happen. So now it's going straight down. So again, you know, the plan has to change because, you know, we got to change with the markets. So, you know, if the market rallies, I will still build those put walls, but if it keeps going down, we'll start scaling in some longs at around 3,400. All right. Australian dollar keeps going up like this. We'll see what happens to FXI puts. Most likely those puts, maybe there's a little bit of short covering in China tomorrow as well. Oh, look at that. It's already recovered a lot of its losses. So we'll see what happens. All right. EEM is affected by Chinese stocks as well. A big portion of EEM comes from Chinese stocks. We shall see. Okay. The dollar, you know, the strong dollar right now is going to hurt a lot of countries. All right. Oh, dollar's coming down. Oh, it's down 1.32% today. Maybe it's unwinding. Interesting. We'll have to see what happens at the end of the day. I may, somebody asked me, would I take profits on my EEM puts? I said I wouldn't because it's such a small position. But now that I see the dollar dropping like this, maybe this is a signal that that trade is over. That was quick. Could be. I might have to change my plan on that at the end of day two. We'll see. We will see. Okay. That's very interesting. UVXY, I still have my December spreads. They're up today, obviously, because of all the volatility. You see the closing order. That closing order is just a few ticks away from full profit. Full profit on this is $5 a spread. So I put it at like $4.75. I just have it good till canceled. So if it hits, if let's say, overnight there's a lot of volatility, this thing spikes up to the 30s, I'll have an order in it. Again, a few ticks below, take full profit at around. I think I said it at 475 out of 5. 5 is my max profit on this spread. Okay, so we shall see. Dow. I mean, that's depressing. I had so much faith in this. Faith was misplaced, definitely. All right. I hope this recovers. Maybe if we see a rally, this recovers, but I doubt it. Again, that was also a very small lotto 1.5 year leap that I did. I did it because I didn't want to miss out. I got too scared of buying shares, and I didn't want to miss out if it just V'd. So I said, hey, let's just buy 1 quarter's worth dividends worth of lotto leaps just to have some skin in the game if it goes up. Well, I'm very glad I didn't buy shares, because if I bought those shares, I was planning on buying 1,000 shares, I'd be down $6,000. Actually more than $6,000 right now. But with those lotto leaps, I think I'm down maybe like a couple $100. So that's not so bad. All right. It can go to 0 and it wouldn't really mean that much to me. But hopefully it rallies, nobody likes losses. So, hey, if I can make it back plus, get something out of it, why not? We'll see. We'll see what happens. Other things that I wanted to go over, one chart in particular too. No, that's not in here. One thing I wanted to look at was corn. Again, inflation, okay? If inflation keeps going up, if our inflation numbers keep going, I can definitely see fears of a more aggressive Fed coming into the narrative, all right? I think this, the source of inflation, everybody's expecting gasoline and oil, but I actually think what's being underestimated is food inflation for the future, and I think that can really, I think that indicator could be corn. All right. Again, we're about a week or so away from the crop report. If we see that planters did not plant much corn, that this can spike, and I think that will make food, that then fears of food inflation will become part of the narrative. All right, so we will see what happens. Wheat. This is what wheat looks like. Everything is up today. Soy is up. Let's see what. Okay, meat prices, the feeder cattle coming down. Lean hog futures going up. All right. I think the clear signal is going to come from corn. All right. Speaking of oil, let's take a look at the energies. Natural gas on its way up again. Oh, it lost some of its gains today. Okay. We'll see. We had that fire at the export terminal, and so that increases our supply here in the United States, because that supply that was earmarked for Europe is still here. So that's why we saw a little bit of a sell-off here, and now we're recovering. We'll see if it continues. Oil on the way up. Oh, wow. It was down. I think it's a new contract. Is that why it shows up like this? I think it's so. I think it's because of the new contract, right? Yeah, I think so. It rolled into the new contract. Let's take a look at gasoline. Gasoline's coming down. All right. Maybe this is peak gasoline. Maybe this is it. I'm not sure. Maybe this is peak usage. It looks like it didn't look like supplies were dwindling all that much, but maybe the market is expecting this to be where the peak usage is for gasoline. And if that's the case, I can definitely see oil coming down later on. But definitely, I think the top is in for oil stocks. Maybe not for oil, but for oil stocks, definitely, I think this was the top. Okay, we were too late. We were talking about XOM puts yesterday, and we said, hey, if we see a little bit of a rally, we were here. We say, hey, if it comes up to about 98, 99, then we'll do some put spreads. Well, that didn't happen. Market said, nope. It's like, no easy money for you, and then just sold off. So, I mean, if you chased it, good for you, because you're now in some profits, some good profits. I didn't want to chase, so I guess I didn't get the reward. We'll see. We'll see if it rallies again. Maybe if we see a little short covering today and tomorrow, maybe it comes back. If it comes back till around the high 90s, definitely I'll buy some 3 to 6 month puts on XLM. And I'll also sell some in-the-money calls on my Chevron stocks. That's my game plan for oil. All right. Let's take a look at Bitcoin. What's going on in crypto space? Still bouncing off that 20,000. Let's actually take a look at Deribit. Okay, let's take a look at Deribit. Let's take a look at options for Bitcoin. I've been writing about Bitcoin a lot, especially on my Twitter. It's just very interesting. I think there's, again, the thesis from a few weeks ago. This is a thesis that I formulated over, months of just observation. But I started writing about it more in the recent weeks. But I think there's a lot of, perhaps there's institutional participation in Bitcoin, and they're using dynamic options hedging to protect themselves and protect their crypto holdings. Right now, that may seem a little ridiculous just because liquidity in crypto space is quite low right now. So who's actually trading all this? I still think that maybe right now, possibly we've lost a lot of retail volume. But as far as institutions, this is just a theory. Of course, I don't know 100%. I'm not, I'm not an expert in institutional crypto trading or anything like that. But I can definitely see institutions not being as active. All right, more storing their Bitcoins in cold storage and not having it, not trading it on a daily basis. I can definitely see that. Maybe they trade these options on a daily basis, and that's the thesis. I think they are trading this and hedging their positions. Let's take a look at the week. Well, the weeklies only got 15 hours left. Let's look at the quarterlies, which is for next week. Volume. Look at that 24-hour volume. Let's see here. I don't need that. Last 24 hours. It's a good amount of puts. Some calls too. The put to call ratio was quite high for the last couple of days. It's coming down a little bit. We'll see what that really means. Volume's quite high in 20,000 strike. We have high OI still there. Every time we get near that 20,000, we're seeing puts getting sold off. Some in the money, some out the money. People are cashing in their puts here. And I think that's causing those bounces, first touch bounces. It goes down to 20,000 or 20,500, 20,600, something like that. And then it just goes, and then just kind of reverses back to 21,000, 22,000 or so. Okay. Is that where there's a lot of calls? Let's see. Actually, we don't need position. Is that where we see a lot of calls? We are seeing lots of calls there. Possibly. Let's take a look at the monthlies. What about next week? Next week also has some good volume in it. Some decent open interest, but still not that. It's still comparable to the quarterlies that expire next week. Let's look at next month. Are we seeing some action for next month? We are actually. Oh wow, a lot more volume. And now there's hedging demand for 15,000, it looks like, for next month. So a demand to hedge for 15,000 next month. That will be an interesting number to watch for next month. Again, just observing. I don't really have positions. I'm just observing what happens. And we're just formulating a thesis here that there, like SPY, there's some dynamic options hedging happening in the Bitcoin market. Let's see if it continues, okay? Anything in particular you guys want to see? Right now, it's really hard to open new positions as, anything that you want to do, like build put walls, you're really gonna have to chase. And chasing when IV is this high and building options positions is very difficult. Oh, somebody was saying something. Go ahead.
Just so you know, on Deribit, if you click in the top left corner,
Okay.
and click on metrics,
Oops.
there is some visual data that you can look at too that I sometimes find pretty interesting.
Where is it? Here, metrics.
Yep, on the list.
Oh, the funding rates. Huh. Oh, they got a volatility index. Look at
Yes, they
that.
do. If you click on the left side again, I think it has on the actual derivative page, not the metrics page,
Uh huh.
you'll be able to find a volatility deval index.
Where is that?
So go back to the other tab,
Okay.
and then the left,
Okay.
click on volatility
Oh, there
index.
we go. Oh, wow. Okay.
You could change the date range at the top
Yeah,
too.
so, okay, so volatility going up. All right. Spiking. Okay. So puts. Put buying. Again, this just support. It kind of looks like SPY, doesn't it? As volatility goes up. It's, the put call ratio goes up. More puts are getting bought. And hedging happens. Definitely supports our theory here. Wonder what that was. Oh, that was June. Oh, that was just last week. No, that was yesterday. This is yesterday. Oh, this is just yesterday. Wow, huge demand for options here. Okay, interesting.
A lot of people wanted to short that pump because they had no chance to get out last time.
So it was longs covering.
Yeah, a lot of people got trapped in their position.
And trapped on leverage, right?
Yep.
There we go. Yeah,
A lot. There was, I think, a historical number of liquidations.
Oh my goodness, that's not good. Um, we'll see if that spills over. Um, dollar is actually coming down right now. I'm actually not so confident now in my EEM put as I was. And I still think that there's going to be a credit crunch in emerging markets, but it may take time to manifest itself. Okay. Oh, look at that Australian dollar breaking out too. It looks like. What is going on? S&P 500 is flat though, but it looks like and right now EEM is curving up. China's curving up. Australian dollars curving up. TNX is coming down. 10 years coming down. Looks like risk on to me, like the beginning, the setup for a risk on could be temporary. Um, copper's coming back off its lows. I mean, this is not really saying much. It could at the end of the day, it could slam back down. Same thing with the Australian dollar. I mean, at the end of the day, who knows? Maybe it goes back down here. Currencies, though, that's a little bit more difficult to do. So maybe this is a signal that we should get out. I'll wait till more end of day and make that decision. And if I make a decision to get out, I'll let you guys know. Okay? I know some of y'all followed me into this and this as well too. I might have to get out and just reassess what's going on. We'll see. We'll see what happens. Any other questions? Anything else you guys want to see? Can you explain how the decision by Switzerland affected the market so much? Yes. So the Swiss franc is a safe haven currency. Okay. Generally, it is overvalued because it's such a small country, but so many people want to have that currency as a safe haven, right? A lot of people all over the world like to deposit their money at Swiss banks, okay, which would require you to buy Swiss francs. All right, small country, lots of people coming in. very easy for their currency to get overvalued. They've had negative interest rates now for, I think, over a decade. Negative interest rates. All right. This rate hike that they do, I think now makes it so that it's not negative anymore. So now there's an alternative. People who wanted to keep Swiss francs but didn't because of that negative interest rate are now considering it. So, with liquidity being tighter because of global tightening around by central banks all over the world, people have to make choices now where they put their money. So if there's demand for those Swiss francs, where's that money going to come from? Well, in this round, it came from selling Eurozone stocks. So a lot of European stocks got sold and they bought Swiss francs. And that's, generally a risk off sentiment. And that pervaded throughout world markets. Right as that was announced in Switzerland, I saw U.S. futures all dipping down because of that. We were positive. If you look at 3-4 in the morning, we were positive in the futures markets. But then after the announcement, it just all went down. It went down, boom, boom, boom. It was huge. Here, let's take a look here. Here we go. More 15 minutes. See, we were up. And then, it was around here, announcement. It's not 3 anymore, so around 1 in the morning or so. And then, boom, there we go. Down it goes. And then we've just been here all day. We'll see what happens. We'll see what happens with the VIX. As the VIX keeps going up, I can see this still going back down. Again, I think what's going to show us is this. If this can hold, if this can steepen, I think then, we might see a rally in bank stocks and in the Dow. Already I'm seeing a turnaround in some other indicators, like, already look at that. Copper off its lows. Australian dollar trying to break out. All right. What does that mean for EEM as well as FXI? We'll see. I'll hold everything until end of day, and maybe a couple of more hours, and then I'll decide what I want to do. And based on that, I'll give you guys a warning as well too if I get out. We'll see. These intraday, there's so many intraday moves in this market. It's really hard. It's really hard to. That's why my position sizing has been really small, because it's been so hard to keep a position. If you hold on to a position, you better be ready to hold on to it and be prepared for it to go against you. And so rather than getting chopped out all the time, I'd rather just keep my position small so I can hold it longer. We'll see if that's a good decision or not. Any other questions? Anything else you guys wanted to see? Guys, just a reminder, next week, Toasty is going to have his own segment here at Checkmate Trading. He's going to be doing it at the pit. His session will start at 9 in the morning Eastern time. So 30 minutes before the market opens, he'll have his own segment, Breakfast with Toast, where he goes over the markets and the pre-day plan for the day. And it starts next week on Tuesday. So hopefully you guys can catch that as well. We'll still do the high noon highlights as well. So now you'll have two voice chats that you can listen in on, a morning session and then the afternoon session. So have breakfast with Toasty, and then you can listen in your lunch hour with me. And then we'll see if we can expand that. We plan on expanding our offerings a lot more. We'll hopefully have some educational courses soon. Also, maybe we work on an end of day voice chat as well. That's yeah, we'll see. We'll see if there's a demand for that. If there is, definitely we'll consider it. But we are planning on expanding, so hopefully you guys get to enjoy all the things that we build going forward. Okay, so right now it is almost 1 o'clock here in New York. It is Thursday. Let's try to end the week strong. Stay safe, stay nimble. This is a fast market. No position is a position. All right. Cash is a position. Always remember that. So if there's uncertainty, if you don't have an edge, you don't need to trade. Okay. We can wait. We can be patient. All right. Keep that in mind. Okay, guys. Have a wonderful day, and I will see you guys later.